Hello, I'm Michael Graham, president of Midwestern Securities and host of Banking on Growth podcast. With us today, we have my friend and colleague, Nathan White. Welcome, Nathan.
Thanks, Mike. Glad to be here.
Glad to have you here. Look forward to telling the audience about you and your expertise. You and I have had the good fortune to work together and build a couple of businesses together over the last almost 25 years. Our audience, though, for those who don't know you, you are involved in John Graham and Associates, which is our retail presence in Central Illinois. You're a shareholder in John Graham and Associates. You're also a financial advisor who specializes in working with employer-sponsored retirement plans, the plan executives, as well as the participants. From there, you've taken that, you've magnified and multiplied the impact of that into our other firm, Midwestern Securities, which is a broker-dealer and an SEC-registered RIA, where you act as our CFO and as our internal and external employer-sponsored retirement plan wholesaler, helping our financial advisors who currently exist in Illinois, Indiana, Missouri, Kentucky, and Wisconsin, helping them with plan design, plan sales, plan service. So you have a real niche and expertise in this area, and we're thankful to share that expertise with our audience on the podcast today. Let's start with the basics, though. What drew you to the employer-sponsored retirement plan space?
Good question. And so us as financial planners, we really enjoy helping people. That's one of the primary benefits of our job, helping people prepare for their financial future and the financial uncertainties they have in the future. So financial planning is a very rewarding process. And one of the primary goals of anyone, almost anyone, for their financial plan is to save for retirement. Unfortunately, the topics of retirement plans, how much to save for retirement, investing, compounding returns, those types of topics are just not taught in secondary schools or most colleges for that matter. So there's a lot of people out there that know they need to save for retirement, but they just don't know how. And so that's one of the biggest impacts that we can have on the most amount of people is by helping them out with the retirement plans. And 401ks, employer-sponsored retirement plans, they're great programs. They're wonderful programs. Actually, I would say they're one of the best ways to save for retirement. And that's because they provide some type of tax benefit. They're simple, they're easy, convenient, I should say, for those employees. Typically, there's free money, right? Those employees, if they put money in, they get a match. And it's a great attraction or retention benefit for the employer to offer to their employees. So they're great programs. There's just not a lot of employers or employees, for that matter, that are very adept at how these programs work. So again, we are able to have the most positive financial impact on the most amount of people and employers by becoming experts in providing this guidance on employer-sponsored retirement plans.
So even though there are tax savings for the employer, there's free money for the employee, most Americans are still not retirement ready or on a path to be retirement ready. And something like 40% of Americans don't even have an employer-sponsored retirement plan available to them. Curious what your thoughts are on that. And, we work primarily in the community bank and credit union space. How do you think community banks and credit unions can help their communities and their customers, members be more retirement ready?
Yeah, there's a huge demand for this. Like I said, pretty much everyone we meet with knows they need to be saving for retirement. They know that there's programs out there to save for retirement. They just don't know how to do that. They need help. They need someone to kind of walk them through this, hold their hands a little bit, and help walk them through this. And the reason is we probably meet with hundreds of employees, at least hundreds of employees every year. When we meet with those, go to the employers, sit down with their employees to help them out with either enrolling in the program, providing guidance on how they're doing right now, if they need to make any changes. And really, for most people, we get this all the time, almost an apology from the employee when they sit down with this. It's like, I really don't understand all this stuff. And I would say at least 8 out of 10, if not 9 out of 10 of the meeting, that's how it starts, right? The employee is almost apologetic that they don't understand, but they took the first step, the they took the first step and they signed up to meet with us. So that's a good thing. But the point is this is really like a foreign language to them. Investing, saving for retirement plans, all kind of a foreign subject to them. They don't understand it. It's very intimidating. So that's the benefit that we can provide. We can help fill that gap by providing that one-on-one attention, because those employees, that's what they're looking for. They're looking for someone they can talk to, someone that's local, someone they can trust. So that's the gap that the community banks can help fill. They have that trust. They have that goodwill with the employers and the employees in that community. And those employees will listen to someone from the bank when they come in and talk about financial matters. So people will save more. People will do the right thing as far as how to invest their money when they're given the proper guidance. And that's how community banks can help step in and provide that guidance from people that will trust.
Thanks for tying that up. So community banks are close to the customers, right? They're involved in their communities. They're sponsoring the home run fence and with the banner at the baseball diamond. They're sponsoring the banner on the gymnasium at the high school. They're close to the customer. Now they just need to recognize that their customer can be the employer as well, not just for loans and deposits and merchant services, but also for employer-sponsored retirement plans. This is a value add that they can provide to help their communities, help their customers. How do banks benefit from offering these things?
There's a lot of different benefits to the bank beyond the goodwill, helping out the employers, helping out the employees. But really, this is about retention. So BISA is an organization for bank and insurance securities. So they put out studies every year, and it shouldn't be a surprise when you hear this. But one of their studies showed that if a bank customer owns an investment product from the bank, that if you ask that customer, they're 28% more likely to say they will not shop around for another bank, that this will be their primary bank and they will not leave this bank. So providing some type of investment product or investment touch to that customer, you're increasing that retention, that stickiness of that customer. And again, another statistic out there, again, shouldn't be a big surprise, but especially with your commercial customers, the statistics show that as a bank need to have at least 4 touches, 4 products that you have with that customer to maximize your loyalty or your stickiness with that customer. So it's not just deposits and loans. You need some other products, other touches with that customer, that commercial customer, in order to maximize that retention with that loyalty with that customer. So there's definitely the retention side of this. The more touches, the more products you have with these customers, the more they're likely to remain customers and do more business with you. Another is cross-sell opportunities, right? The idea that let's say you sign up, help the local business owner that has 30 employees, help them sign up with a retirement plan. They need this. They need someone to help them with this. You help them with that. That provides income, revenue to you as the bank. But here's another thing is now all of a sudden, let's say of those 30 employees, 28 of them sign up for the retirement plan. Now you can send bank newsletters to those 28 employees. They are now technically customers of the bank through the wealth management division. So you can now cross-sell your other products to those employees. So broaden that customer base that you already have in the community and have better, deeper relationships, not just with the commercial customers, but also with the individual customers as well. So, the revenue stream, the having access, cross-selling to more customers, and then the final leg of this is protection. So more and more 401k companies out there, more and more advisory firms out there are now offering your traditional bank products. They're offering loans, they're offering high interest money markets, and they're providing the constant marketing barrage to those 401k employees. So that local business down the street is the commercial customer is getting solicitations from their 401k company about doing loans through them, about taking their deposits out of the bank and going with them because they can get a higher interest rate. So this whole and that's happening more and more. More financial firms are becoming more of a all-encompassing one-stop shop, if you will, for their customer base. So more of these financial firms are becoming more of a competitor to you. It's not just the local bank, the community bank that's the next town over, or the regional bank. It's these huge national firms that are providing 401k services. So keep the fox out of the henhouse, right? You should be providing that 401k service to your commercial customers so that those other companies are not coming in and trying to poach your existing business.
Yeah, absolutely. We saw it heavily last year. A lot of the markets that Midwestern Securities in is our rural markets in Illinois, Indiana, Missouri, Kentucky, Wisconsin, like I mentioned earlier. And all of those things, all of those communities have a few things in common. They have a Dollar General, a Casey's, and an Edward Jones office and a strip mall. And Edward Jones was super disruptive last year with full-page ads in local newspapers, countless dollars out of community banks into brokered CDs at Edward Jones. So that Edward Jones rep is also not just competing on the investment side and competing on the 401k side, but they're competing for the bank deposits as well. So I think that's a really important part. We need to understand who our competition really is. We look around the securities industry, and I think last statistic I heard is that Charles Schwab made about 65% of its revenue from their banking services. Okay. They're a competitor. We need to recognize that they're a competitor. How can we keep that competitor out? And of course, we know the big banks like Wells Fargo are clearly competitors. So we don't want to be feeding and strengthening our competitor who will, if given the opportunity, take our customer and destroy us in the business place, in the marketplace. So we've got to be strong. You've heard me say the phrase, exercise the power that we have. The community banks have the power. They have the relationships. If they have the product, services, and training, which Midwestern Securities provides them, to bring in that expertise without them having to keep that expertise as a fixed expense on their payroll or somehow identify, train, bring their own people up to speed. They don't have to do all of that on their own. We do that for them with the strengths that they have being close to the customer and with the strengths that we have, scale expertise in the employer-sponsored retirement place. But talk to us about profitability of this. How does this help banks be more profitable, growing their share value, increasing their dividend, et cetera?
You touched on the Edward Jones example, and I just want to give one more to that because we just went through this about 2 months ago. One of the top 3 401k providers, I think they have something like 17 million participants in their plans, was going to send out a mailer to all their participants about their money market outside of the 401k. This is not in the 401ks. It was basically, hey, what are you getting on your deposit accounts at your local bank? Our money market is making X, the same thing that Edward Jones has done. But this was going to almost 17 million employees throughout the United States. So, and no one would have perceived this as a competitor. And that's exactly what the mailer was going to be, going out to all these employees. Thankfully, we have a good relationship with them. We stopped that mailer from any of our banks and any of our bank customers that work with us on the 401k side, because we don't want conflicting messages. We want those employees to go to the bank for their deposit and loan needs. So it's just happening over and over again, and not from your traditional, what you would consider your traditional competitors.
Willie Sutton, do you remember the story of Willie Sutton? I think that was his name. He was a bank robber, maybe 70s and 80s. I've heard the story. It's maybe more of an urban legend at this point, but he was a bank robber that had, when asked, why do you rob banks? He said, that's where the money is. And in addition to that, why should we be working with employer-sponsored retirement plans? Because that's where the money's at. I'm looking out my window and I can see a local hospital system that I know has about $3 billion in their employer-sponsored retirement plans. Right? So there is a lot of money there to be served that if our community bank partners aren't servicing them, they're going online or to some firm that doesn't have a local presence, and the revenue, the profitability of that is leaving the community. How do you add more value to commercial clients if you're a community bank or a credit union?
so the question was, how can a bank make money, or can a bank make money off of these retirement plans? And I'll give you a specific example, and there's many that we can give you, but there's one of our wealth management practices that's been around for a while, and they've made it a goal that they bring in X amount of plans every year, and they service those plans correctly, which means they go and they meet with employees, which leads into other business, helping those employees out with their individual financial planning needs, not just the 401k. I would guess, and this is not exact numbers, but I would guess that advisor is bringing in about $400,000 in revenue just from plans, retirement plans, servicing retirement plans, or the employees that they now are working with on an individual basis. So if that advisor had never touched these retirement plans, never worked with those employees, that's $400,000 less in revenue that they would be bringing in. So you take that over to the bank side, from what would the bank take as an override of this? It's probably $150,000 to $180,000 in revenue to the bottom line to the bank, net revenue to the bank. That's non-deposit revenue. That just from these retirement plans. And again, this is a very specific example, but this is what this is a goal. This is what some of our advisors are moving towards in creating a somewhat of a niche market, working with as trying to bring on X amount of retirement plans a year, because that will bring in Y amount of revenue to them, to the bank. And in addition, there's the Z factor, which is they're going to work with that many more individuals, because when you work with a retirement plan, employees change jobs, employees retire, and those employees automatically come to you as the advisor, because you have that goodwill, that trust already built up with them. So it's a way to continue to feed your wealth management division and create more of a enterprise level wealth management division, just versus just a book of business. So we've seen some practices doing this. They're doing it the right way, and it definitely leads to more revenue to the bank.
Good. Yeah, thank you for coming back to that as well. So we have a saying, mum's the word, money under management. We get the assets in the plan. Generally, we find there's at least $1 in outside assets as there is $1 in inside assets. So if we're in a smaller community with smaller hospitals and smaller employers, there's still lots of assets there. If we're in a mid-sized community like Peoria, Illinois, we know that there's, the local hospital system, again, $3 billion. If we follow that dollar for dollar, there's another $3 billion in relationships there. That's a very extreme situation of where the money is in people's retirement plans. It's very heavily weighted in those employer-sponsored retirement plans. So let's talk about adding value to commercial customers. Any thoughts on how this all plays well inside of a community bank?
Sure. So pretty much most, if not all, commercial customers are looking for this product, this service. They're looking for someone to help them out with a retirement plan. And so there's competitors out there, like we talked about already, that are already providing this service for them. So if you as a bank are not providing this service for these commercial customers, which is something they need, then they're going to go somewhere else and they're going to find that service. And then again, like as we talked about earlier, that means that they're going to be susceptible to other products from those providers, and potentially get into your traditional banking products. So it's back to you're adding value because you're providing a service that they need and they want. Unfortunately, in our industry, and Mike, you and I have seen this the last 20 plus years, especially in the 401k, everything is becoming less customer service, right? Everything is being pushed to go online, to call an 800 number, less advice because there's liability if you give advice. So everything has been moved to do it yourself, go online, that's the service model. And it is very frustrating. As we said earlier, this is a program everyone should be participating in. Most people don't understand it very well, but the service, the education, the amount of guidance available is getting less and less. So that's something that we have, that unique advantage that we can provide that. And we know community banks are just like us. We want to have high touch service with our customers. And here's a product that's out there that is moving away from high touch service very rapidly. So it's a way that we can continue to provide that unique service model that we provide, as well as community banks provide to their commercial customers.
At Midwestern Securities, there's a scalability of intellectual capital, of assets, of relationships that we've built with our approximately 40 financial institution partners that really shortens the learning curve of our community banks out in the field by themselves. And to compensate for some of that lack of service that's out there in the employer-sponsored space, that's one of the things that you do a really nice job of interacting with the advisors. I know we just talked with one of our advisors, Mark, who has had a lot of success the last 12 months selling plants. Mark doesn't have that success without an advocate like you and like Midwestern is providing. He doesn't have the expertise. He doesn't have the relationships. He doesn't know who to avoid and where to guide people to. So we're thankful for you, Nathan, and that service that we have to help our community banks. Let's talk about steps, though. Community banks want to be in this. They understand there's mum's the word. They understand money under management drives revenue. They understand they're close to the customer. How do they get started? How do they act to get out there, build a business plan, build a marketing plan, and let it be known in their community they're experts here and they want to help?
Sure. So the first thing I'm going to say is we'll help you with this. You mentioned Mark. We've helped many advisors through this whole process. Mark came from a previous financial planning firm, had zero support, so didn't know how to get into this. We provide him that structure, the steps A, B, and C. Here's what you do. He went out there and did it. I know we were joking around about it. It was a proud moment that us as instructors, we tell these advisors what to do. He did it. It was successful. That's exactly what will happen. So we'll provide the structure. We'll provide the guidance what to do. The most important thing, of course, is that you do it and you provide that access to your commercial customers, to your employees that'll walk through here. So the first thing with any kind of new business line, if you will, is you got to set a goal, right? And we'll help you understand what a good goal is. But I'd say start small. Start with, we want to do 5 new retirement plans this year. And it's manageable that way. Because I'll tell you this, if your advisor's never done retirement plans, like Mark had never done retirement plans, but after his first 2 plans, and he just took off. He was good to go after that. So it's kind of like the training wheels first, and then we take the training wheels off and they're able to do this on their own. So we provide a lot of the structure initially, and then once you get some experience, you can kind of take off on their own. But you, from a leadership perspective, should provide some goals. And again, we can help you with this. Start with 5 plans, and then take that down to the micro. That 5 plans means that you need to have, let's say, 6 proposals every quarter, 2 proposals every month, something like that. We'll provide that structure, and then provide that from your perspective, from leadership, make sure that's being done, making sure that there's new proposals coming in. And that's just not just on your advisor, it's on your other staff as well. Communicate these goals to everyone in the bank, your leadership, as well as your employees, as well as your advisor. And then some action item steps that you can take. We call these lunch and learns is the first one. Very, very successful, super successful, and even more so through community banks. Mike, you and I have done countless, hundreds of these over the years, and it's usually cold calling a business owner, and we've had a lot of success with that. Now, you take that to the community bank space, you don't need to cold call a commercial business customer, right? So what I'd say is, you as a bank, take an inventory of all your commercial customers. Look at that list. And again, start small. Pick 10 of your best advocates, your best commercial customers out there. Those customers that when you call them, they're going to pick up the phone, right? So take a list of 10 and then look at your bank. Who has the best relationship with the decision makers from that team? Okay. Then ask those employees to reach out to those decision makers and ask them, hey, did you know that we do retirement plans? Do you currently have a retirement plan? Hey, let's grab some lunch. I want to introduce you to our financial advisor. And so schedule lunch. That's the goal. The goal is not to sell them on a retirement plan on the call. The goal is just to, hey, let's get lunch. I just want to let you know that we offer this service, and let's get together and talk about it. And so then the advisor, the person who made the call from the bank, and maybe even other leadership if they want to, attends this lunch. And so it's a goodwill lunch. but it's also talking about what they currently have for retirement plan, fact-finding mission, right? Get some information about what they have, what kind of service they have, who services their plan, that sort of thing. If they don't have a plan at all, and just bring that back to me. And then we will help you out with what to do next, how to put together a proposal, how to go about with a follow-up meeting with that commercial business. Okay. So that's a pretty easy one, and it's incredibly successful. Okay. It does require some assistance from the bank, but it's a great way. You're taking your best customers out to lunch. You're increasing those touches with those customers. It shouldn't be that hard of a task for your employees to be able to do that and tee up some of those conversations. The second one that I would say is is more of like a seminar campaign, if you will. We do these all the time. Mike, you and I have done these for a couple decades now, right? But being consistent with some type of education, and it is all, I want to be clear, it's not sales presentations, right? We've all been to those when they're trying to sell their new tech product or their new widget or whatever it is. That's not what these are. This is simply education, because that's the one thing. I talked about this earlier, that employees are intimidated by retirement plans because they don't know much about them, right? Employers are just as intimidated. They're just as in the dark on retirement plans. They really just want to have someone that takes care of it for them. But they also want to understand a little bit of the nuts and bolts because the rules are always changing. So there's always something to be talking about and helping out business owners on updating best business practices or new regulations or whatever it is. So it's pretty easy to do 1, 2, 4 of these presentations every year. Make them consistent. Make sure that they're accountable. Make sure that your advisor is doing this, and make sure that your team, your employees at the bank, are getting people to these presentations. Have them pick up the phone, call the best commercial customers, call their contacts, get people to come in. It's a lunch. Sit down. Business owners are hard to get nailed down to come in, but they'll always usually will come in for a free meal, right? Especially at the bank. And it's an educational topic. It's to help them understand retirement plans, when really what it is a goodwill mission, right? It's helping them understand, hey, we know what we're talking about. We can be that person that you can outsource the management and understanding of retirement plans to. So make sure that's consistent. Make sure that you monitor that, see how many people are coming to that, how many are the follow-up to those seminars, making sure there is a follow-up. If you got 6 business owners that come in there, making sure that you're getting 2 or 3 meetings, your advisors are getting 2 or 3 meetings out of those seminars or those workshops. The third one is make it a requirement that any new commercial application that comes in, there's a section on that application that says, do you currently have a retirement plan? If so, what type of plan? Is it a 401k, 403b, simple IRA? And who services that retirement plan? And then have a little checkbox right next to that basically says, are you okay with our wealth management team following up with you about pertinent information about retirement plans? So make it simple. The idea is having the data, having the information available, like of your commercial customers, who out there has a retirement plan, who doesn't have a retirement plan. That's probably the bigger part of this, because those should be the first business owners you're talking to. And then some of those who they have that have a retirement plan, who are they working with? It might be a competitor. It probably is a competitor, even if it's not a local company. It's probably, like we said earlier, some type of firm that is competing with you internally through other services, other products that they offer. So having that data, and then use that data to follow up, put a drip campaign, have a wealth management newsletter that goes out to those commercial customers, invite them to add them to the invites to your seminars you're doing twice a year, that sort of thing. So get that data and then use that data.
Those are good, Nathan, and they are simple, and they are easy, and they are effective. And there's really not a reason not to exercise those and get in front of people. And I think it's important how you stressed follow-up. You've got to, whether it's a lunch and learn, it's a seminar, it's a joint meeting with a loan officer, people generally still require a follow-up. Call them within 2 business days and say, hey, this is Mike from the bank. This is Nathan from the bank. Or we had a great discussion. When can we get back together and continue this discussion? So follow-up is the key. We've got to be outbound, we've got to be proactive, and we've got to ask for business to come back. It's not like the lending side where people call and say, I need money, and they're going to follow up with you. So bankers have the power, but it does require some easy, simple steps with follow-up. Nathan, I think it's important we talk about it, just a couple other quick topics. Who are the competitors in this space generally?
I would say the biggest three, I always hesitate naming names, but the biggest three companies, and everyone has a different qualifier and who's bigger and why. But so I would say the three biggest ones are Fidelity, ADP, and Vanguard. Three of your largest 401k providers. And what's striking about those three and why I use those specifically is because not all of them, but for those three specifically, they pride themselves on a direct channel. So a direct channel is they don't work with a financial advisor. You as a business owner work with them directly. So the idea is some of these business owners, and we see this all the time, Mike, right? The business owner is pretty knowledgeable about investments themselves, or thinks they are. And so that they have all their investments with Vanguard. So they put their 401k with Vanguard. And their employees know nothing about retirement plan. They're making all the wrong decisions. They're not enrolling in the plan because they don't have anybody local to help them out with this. So that's the key there is we talked about earlier, the community banks are high touch service, and these 401k providers are moving away from that for that small few people out there that like to do it themselves and can do it themselves, where the majority need someone to help them do it. Okay. So those big providers are not working with someone local. They're not having someone provide that local attention and service. And again, that's where we can help out with. They're working with these plans that are not effective for most of their employees, whereas we can provide them a plan that is very effective for those employees. Something
you pointed out, just I'll accentuate more, is they're not local. The community banks are local. Our credit union partners are local. And that's the key differentiator. It's the key differentiator to start the discussion. It's the key differentiator to manage the relationship. And it's the key differentiator to provide excellent service and ongoing relationship management, that being close to the customer, being local. One of my favorite business memories is you and I getting frustrated with a national TPA, third-party administrator. We were so frustrated with how poorly they were servicing one of our local nursing home customers that you and I said, that's fine. We will be there this afternoon. And they said, but we're 10 hours away. And we said, well, we're going to get a turboprop from the local airport and we're going to land in your airport. And we want to see the manager of your customer service department. But we advocate for our customers, whether it's for the financial advisors in the community financial institution or the retail customer directly, so that rep that just does one or two plans here and there doesn't have to have that same level of commitment and expertise that we're willing to hop in a puddle jumper and get up to Brainerd, Minnesota. We're going to make sure that the customer is getting a great experience. So a couple other quick questions. What's a MEP? Real briefly, with employers, bankers don't need to necessarily understand the nits and pits of a 401k and a safe harbor and a new comparability and a MEP and a PEP. But can you just give us a quick snippet here?
Yeah, MEP stands for Multiple Employer Plan, and it really kind of keep this as simple as possible, right? We've seen this, Mike, you and I have seen this over and over again. These employers know they need to have a retirement plan. They sign up, they get a retirement plan, they assume someone else is taking care of everything for that retirement plan. But the Department of Labor and the IRS has different rules that basically says you as an employer have all these requirements you're supposed to be doing. And that's the main benefit of the MEP, the Multiple Employer Plan, is that it outsources as much as legally possible within a retirement plan. So we saw that demand, we saw that need. Our advisors needed a simpler solution to provide to their customers, and our employers need a simpler solution. They need to run their business. They don't need to worry about every other month reading up on the new 401k regulations or going through a checklist. every week, making sure that check the box, everything that got done on their 401k. They need to run their business. They need to look to continue to grow their business. So that's the beauty of the MAP is it creates a simpler 401k program that's less work and less liability to employers.
So most of our audience is community bankers, financial advisors, but let's say there's a business owner that's listening. Where do they even get started if they want to be proactive and reach out to somebody to help them navigate some of these regulatory changes? They have to now provide an employer-sponsored plan, or if they want to for attracting employees, retaining employees. What advice would you give them?
For the employer that's listening, I would say, reach out to your local community bank that partners with Midwestern Securities, of course, that has a wealth management advisor that is knowledgeable in these retirement plans. We all need a person to take care of this for us, and so that's one of the things. We get this a lot of compliments about this on our retirement plans. Not only the high touch service that we provide to the employees, but more importantly to the employer. Every 401k vendor out there, you mentioned TPAs, there's record keepers and so forth. These 401k providers out there, they speak 401k-ese, right? It's complicated corporate type conversations with a lot of jargon in there. And most employers have no idea what they're talking about. So we're the middleman in this. We do understand that. We understand how to take a 20-page document and try to boil it down into, hey, this is what this is actually asking for. Here's what other businesses do. Here's best business practices. Here's the best way to handle structure this program based off of your goals. So we can take that complicated, make it easier, interpret it into layman's terms for you as the employer. So work with an advisor, because that's one of the best attributes, one of the best benefits we provide to the employer is taking that complicated stuff, jargon, if you will, and make it into something easier to understand for you, and craft this great benefit program that you provide to your employees. And then we take that and we meet with your employees and take this complicated subject and then take it and make it a simpler conversation with your employees. It's always very rewarding to sit down with employees and they come in apologetic, like I said earlier, and then as you talk to them, all of a sudden you see this light bulb go off. They get it. They understand this. If you can break it down into their terms and they understand how powerful this program is. So we'll help with all of this. We'll provide that structure. We'll provide that guidance throughout all this. And that's not just for the employers. It's for the community bankers out there as well. And every one of our advisors that have gotten into this, they leverage our help to get programs started, and then they get their feet wet, so to speak, get experience in how these programs work, and then they can move on their own.
Nathan, if a listener doesn't have a community bank partner in there or credit union that they want to work with in their marketplace or financial advisor, how would they reach out to you so that you could help them take the next step with an employer-sponsored retirement plan?
Sure, you can email or call me. I'm hoping we can put up our contact information. I'm sure we'll have that on here, but our phone number for John Graham & Associates is 309-699-6608, or my email is nwhite@midwesternsecurities.com.
Awesome. Thank you, Nathan. We covered a lot of ground in a pretty short amount of time. We really appreciate your generosity with your time and your knowledge. So thank you for joining us.
As you know, Mike, I can talk quite a while about retirement plans, so I appreciate the opportunity. And if there's ever anything else I can do to help, let me know.
Will do. And to our listeners, thank you for joining this episode of Banking on Growth. And we look forward to seeing you on our next episode of Banking on Growth. Thank you all.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.